Back with India Market Open right here on NDTV Profit. Now let's get in a corporate in the financial services space to try and understand how is the sentiment around offtake lending been for maybe Q3 and what is the outlook looking like for 2026. Rajesh Sharma, MD at Capri Global, Johnson right now to talk about that. Mr. Sharma, great having you. Thank you so much for taking time out and wishing you and your team a very happy 2026. I wonder if you believe it will be a happy 2026 based on how Q3 trends have been, particularly December, which is kind of given fairly skittish data if the high frequency indicators are to be believed.
Yeah, good morning and wish all of you Happy New Year.
Thank you.
So going by the trend of Q3, we see a strong demand on the ground on the retail loan side. And if we talk about our segment, we are fully collateralized, specifically gold loan. We see a good run without compromising any yield. The good yield, good demand, and good collection efficiency across all other verticals is giving very good confidence. We are on the path to deliver a 40% growth again.
Okay, and Mr. Sharma, I wonder, so is it prompted predominantly by the gold loan segment, which is very strong for most people which are in this bucket, or do you believe others are contributing as normally as they can?
So I put it this way, because gold, we have largest number of branches. Till quarter last, we have about 835 operating branches. This quarter, we are again going to add about 100 plus branches, and then last quarter we'll add another 30 to 40 branches to reach to 1,000 branches gold loan alone. Besides that, we are expanding in the MSME and affordable housing segment and opening the south also. So to say, because there are large number of branches in gold will contribute about 40% plus of the AUM, and the growth is coming more on the gold. Whereas the other segment of MSME, affordable housing and retail construction finance, they are growing at the average pace about 30% plus.
Sharma, I'm just trying to get a sense on the MSME bucket, which accounts for about 21% of your AUM mix in the second quarter. I'm assuming that if you've gone to 40% in gold, then this will diminish further. But I'm wondering what the collection trends have been and whether some of those slippages, not necessarily for you, but for the industry, and you probably get a sense of that, have improved.
So if you talk about MSME, there have been a lot of discussion about delinquency rising in unsecured segment, more in particular. If we talk about which are MSME loan backed by collateral of self-occupied house or business premises, we see that collection efficiency is going to be good, and in the price range we land, which is about 15% plus. I think the delinquency GNP are in the range of about 3.5%, and net NP is less than 2%. So that is in any case anticipated range. There is no surprises as such, and collection efficiency continue to be as anticipated.
Specifically on the gold loan side, Mr. Sharma, I think everybody has been surprised by that 65% up move in gold. And the question therefore is that if it comes off sharply, does that pose a problem for your loan to values? Where do they stand right now in the latest loans that you're dispersing?
So if you talk at the portfolio level, loan to value in the range of 65-60% in the wake of the gold loan prices are increasing. As far as the incremental disbursements are considered, they are happening in the range of about 71-72%, because there are some low LTV scheme also. As regards the risk, in case the price gets corrected, since the individual loans are in the range of about 1,50,000 rupees, and there is a enabling clause in the loan agreement where we can recover. So if the gold falls 5%, every individual customer we have to recover about 5,000 to 7,000 rupees, and that we are able to recover from the customer. So it doesn't happen that suddenly gold will fall 15% in one day. This gives a time and you can recover from the individual because the granularity of the customer is there.
I just want to clarify, Mr. Sharma, generally these gold loans tend to be shorter term loans. So what is the average maturity of the gold loans that you have right now?
So average maturity contractually are in the range of 6 months to 1 year, but behaviorally, they do not last more than 4 months.
Okay. So, okay. So, and you don't anticipate, it's not a business case for you at this moment that you don't anticipate a sharp fall in gold prices. Would that be a risk is what I'm asking you?
So to be very fair, neither we anticipated gold will go up so much, nor I think we have any expertise to say gold will go down. Only the comforting factor is even the gold goes down, we have a 15% cushion in the worst case. You give maximum LTV of 75%, and even though they default from the day one, LTV will not cross 80 to 83%. So 17% loan to value still you have cushion, and that cushion plus you have a connectivity with the customer you can recover from in case the price correct, and that gives a lot of cushion. The individual loans are, as I said, only 1.5 lakh rupees. So even the price correct, 5,000 recovery from the customer is not that difficult.
Thank you so much for taking the time and for speaking to us on NDTV Profit. Wish you all the best in 2026. All right, now it's been an astounding ride.